My next guest says new home construction has to prop up supply because inventories are back to their lowest levels since April of 2022. Andy Walden is VP of Enterprise Research Strategy at Black Knight. Andy, it's good to see you again. Welcome.
Yeah, good to see you. Thanks, Kelly.
So overall, housing inventories are back to levels from last year?
Yeah, absolutely. And they've dipped in 95% of markets across the country. So this is something that we're almost universally seeing across the U.S. Massive, massive inventory challenges. So fantastic news to see some new construction on the horizon.
So a lot of people are trying to put this in larger context and say, OK, well, is the housing market, broadly speaking, inflecting, turning higher, or are we still kind of at a down 35% from the highs and going to be a drag on economic activity? Do you think things overall have turned a corner here?
I mean, I think they're inflecting in terms of price. Absolutely, right? We were seeing some very, very noticeable price declines late last year. They've turned higher. We saw roughly average home price growth in April, according to our Black Knight Home Price Index. So certainly from a price perspective, we've inflected. In terms of transaction volumes, I mean, demand is still down 35%, 40% from pre-pandemic levels. In recent weeks, you still have this lack of supply out there in the market. So just in terms of transaction volumes overall, we're going to continue to see some suppressed numbers here over the next few quarters.
And talk to me about prices. Where do you think we go from here?
Yeah, I mean, I think if you look at that annual home price growth rate, that headline number that everybody looks at, it's gone from 20% to 0%. It looks like if you just look at the trend line, looks like it's going to go negative. I think it starts to inflect here over the next couple of months. I think we dip below 0% for a very, very small handful of months here, and then you start to see that trend higher. There's just not enough supply out there. So even with demand suppressed, I think you're going to continue to see prices firm up and trend higher here over the next few months.
It seems obvious if the Fed keeps hiking rates, it's just going to exacerbate conditions in this direction. But I do wonder about, if the market wants to price in lower rates a year from now for whatever reason, economic slowdown, inflation getting back under control, if the Fed does start cutting, that seems like it could massively change the dynamics here.
And that's really the big challenge that the Fed is facing, right? Because the same lever they're pushing on to squash demand is also squashing supply. And as soon as you let off those brakes and let interest rates start to come down, your demand comes back. I'm not certain supply is going to come back as soon as demand, and that risks reheating the market. And so that's where this new build footprint and trending higher, that could be very good news for everybody, right? Buyers out there, builders, obviously, but maybe the Fed as well. If you can get some of that new build inventory into the market, maybe that increases supply and lets them ease a little bit. But where we're at right now, if they start to ease, you're going to see markets reheat.
There's one little story on my mind, and you got to tell me if this is emblematic or not. There's a great piece in one of the Boston newspapers about how Cape Cod rentals are going unfilled this summer, and no one can figure out why. And if you read the article, it turns out the supply of rental homes in Cape Cod has gone from like 12,000 pre-pandemic to 16,000 as people think, great, I can get in on the Airbnb market and are charging these high rates and so forth. And I wonder if there's something analogous to draw here about the whole U.S. housing market or not. Have we reached a point in which, we think there's too little supply, but suddenly things are going to turn and we're going to think, no, actually, there's weird dynamics going on here and maybe there's actually too much of it?
Man, I hope that is the case. I don't think it is, especially when you look at some of the supply numbers across the market. But I mean, in terms of some of that rental data, it really depends on where you buy. If you bought more than 2 years ago, you can still cash flow that stuff really easily. It makes it a lot harder to find enough rent revenue to make it work in today's market where you're buying at a higher price and a higher interest rate.